All right, traders, happy Friday. This is Christian from Tribeca Trade Group, and today is June 25th. It is the end of the week, the end of the week, start of the weekend, and we'll go over obviously today's performance, which you have up in front of you, as well as the week's performance too, which I like to review on Fridays and just kind of give my end of week thoughts. And we'll get going. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through here is for information purposes only or education purposes only. If the video is a little bit blurry, YouTube takes a while to render the high def version of the video, so just give it a little bit more time. So what do we have here? So S&P did finish positive for the day, up 35 basis points. The Dow was the leader today, up almost 0.75%. The Qs lagged a little bit, but again, not too much to really complain about. Flat market after this week's performance. Again, I don't think anything really to be too negative about. Interesting. The couple of things that I've got highlighted here were the bonds. I thought that was kind of one of the most interesting moves of the day. And then we'll, of course, talk about some of these Russell rebalance names that we saw. But, bonds were quietly down 1%. Really did not have too much of a move the last couple days. You could see kind of inside day, and just kind of settling back here. So one thing to notice here with the TLT ETF, which is plus 20-year government bonds, is that the candles are just a little bit bigger than normal. Than what we've seen over the last couple months. So, of course, a lot of that, was stemmed from the FOMC meeting, but you could see the volatility is still pretty decent there in Treasuries. So for now, we're holding above the moving averages, but we'll be on the look to see if there's any changes here. A lot of time, bonds do drive moves, so. Not only in the banks, but also in, growth versus value and that kind of stuff here. So we'll just kind of have to pay attention to that, and we'll go from there next week. But I don't see any major signal here, other than giving back some of those gains from a few days ago. All right, so that's the story there. Let's go through just the quick technicals in the indices. SPY is grinding higher. Complete shakeout. Now we have our 2020 glasses on from last week, and complete shakeout from what we saw last week and out to new highs. Isn't it funny that the market likes to do that from time to time, right? Shake people out and then do the move in the direction of the trend. Well, that's what we got last week, and completely different tone. When I sent out this video last week on Friday, I mean, it was it looked like death, and sorry, not I'm being dramatic, but I mean, we closed on the absolute lows, big down day after the S&P and Nasdaq rebalance for quadruple witching last Friday, but we held in there quite nicely. And just to kind of recap a couple of things that some of the themes that we talked about from the weekend macro video that we sent out to members was that the sentiment was really quite negative. That was one of the things that kept me kind of positive going into this week, right? Remember last weekend, which I know is a long time away at this point, considering this week's price action, but a lot of doom and gloom, over the weekend. The people, I saw a couple of people, by the way, here's the week's performance. You could see SPY was up 2.8%. Dow was up 3.5%, small caps were up 4.6%, and the Qs were up 2%. This is what it was the week prior. I always keep the prior week stats up here, but complete reversal for the small caps, which led lower last week, and you could see a lot of things reversed, right? So if you take the net of the two, so for instance S&P, the S&P, when you net this out, up about 0.5% from the last 2 weeks. Think about how you did over the last 2 weeks, right? Did you make a net net, not just this week, but last week? Did you make money or did you lose money between the 2 weeks performance? Most traders are generally trading to the long side. A lot of people do short and so forth, and that's perfectly fine, in my opinion. But I'm just talking about on the average, most traders are positioned a little bit more to the long side. So if you came out positive after the last 2 weeks, you did a pretty good job trading, right? Qs were up. Qs were the week prior were the bright spot the week before. They were still up another 2% for the week. So all in all, really, really nice performance there. So I wanted just to finish my thought. I was talking about the weekend sentiment, and every time there's a little bit of a market dip, you hear people talking about crashes and all kinds of things. But that's really where I think you can kind of make money in this market is just kind of take things day by day and observe, react. There's a tweet that I sent out a little while ago just talking about that. Being objective, really trying not to make too many predictions. It's one thing to have, what I like to say in trading a lot of times is, have ideas, have setups that you're looking at, put into action some of those setups, but know where you're going to be wrong, right? And the more what I've found over the years of me trading for my personal account, over the last 5 years, as well as my institutional career, the real cocky people, the real arrogant people, the ones who like to make predictions, the ones on Twitter that do a lot of crazy things, talking about, I gave you this setup and it touched this price. Those are the guys that, normally in the long run don't do too well. The cockier you are in this business, usually the flash in the pan. The more that you are, the more that you realize that this market can humble you, and as more grounded you are, the better I think that you're going to do. That's just my opinion. But I've seen a lot of things, from coming from institutional trading, actually, coming from retail, because my first job out of college was working for, was working for Morgan Stanley Dean Witter before they dropped the Dean Witter name. So I worked on the retail side. I worked on the institutional side for a number of years. That's where most of my career on Wall Street was. And now trading retail. So back to trading retail. And I could tell you that the more that you could stay objective and not come out with the crystal ball stuff and making predictions, I think the more that you're going to be successful in this game. And it's not easy, right? Coming out of just to kind of tell you where I was last week. I had vacation last week, and I had tried to basically trade through a little bit vacation and participate, but I made a few bad decisions last week. Some of which I got stopped out on a few trades that rebounded, and just perhaps I wasn't as focused as I should have been on vacation, and and that's a lesson to kind of just maybe shut it down for a couple days rather than try to press and force trades. But yeah, there's a number of trades last week that I was in, and I could have stayed in. Perhaps giving a little bit more of, a little bit more of a stop, a bigger stop than, what I was using for some trades, kind of would have helped. But, that's what this is all about, by the way, right? Is for as long as I've been doing this, right? You never get to the point where you've completely figured this out, right? This is a mental game every day. So, realize that, right? That you never get to the point where you're going to completely figure this out. It's always making adjustments. One of the things that I said too over the weekend was, whenever I've had a trading slump, sometimes it's one of the best things that can happen to you. Because sometimes you get a little bit sloppy in your trading, right? And every time I've had one of these, I don't want to say ever, but just these 1 week slumps, or sometimes if it's a little bit longer than that, that's fine too. But every time that's happened to me this year, I've been able to basically get myself realigned and realize, analyze and figure out what you were doing wrong, and then come back and live to fight another day. So I just wanted to talk about that quickly because I think it's important. The investor's psychology and what we're doing on a daily basis, is not an easy task. So bottom line, let me get through the rest of this, today and this week's performance, and then I'll just give a few other highlights here. But again, I think it's important to make sure that you're going through, reviewing your trades, analyzing what you did correct, what you did wrong, and then improving. This game is all about improving and trying to limit your mistakes, and going forward, and just realizing too, which is one of my points from this weekend, realizing that everybody's human, that you're going to make mistakes, right? Everybody. I always talk about sports analogies and try to compare a little bit of trading to sports, but some of the greatest hitters in baseball, right? They make swings, they strike out, right? They all do, but they come back from that and they make adjustments and they improve, right? Some of the best hitters, some of them strike out less, but they do strike out from time to time. All right, so today's performance. We talked about bonds. The VIX was down another 2% for the day. Utilities actually performed pretty well today. The banks performed well today. I think a little bit had to do with that, with the stress test. I wasn't expecting any major moves out of the stress test because also in trading, you have to realize, how it works. That if something is widely expected, you don't get that big of a reaction. When things are a surprise, you get a big reaction. So I think for the most part, people were, everybody was expecting the banks to pass the stress test. That's why you saw a little bit of a reaction. I think they trended on the day, helped by what the interest rates were doing too. That in combination, good news is good news, right? That in combination with yields going higher, bond prices going lower, helped out the banks a little bit. Interesting, the metals and mining gave back a lot of their gains from yesterday. I kind of thought that might be the situation, right? There was this infrastructure plan. Again, it did get a little bit of a move yesterday, but we've heard about an infrastructure plan for some time now. So again, it's a little bit of buy the rumor, sell the news that happened there. The metals and mining down 2.2% for the day. GDX, gold miners were probably the biggest move down there, but the materials, which I even tried to trade in the materials today, which didn't work, and I ended up taking it off. I had a couple of those trades this morning where I battled a little bit with some things and realized like, hey, not a big deal. If it's not doing what I want it to do, whether it's a sector or a stock, just take it off and reassess. All right, so that's that. I wanted to. Speaking of things not expected, right? Nike. That was a crazy move up to 154. So you talk about something that wasn't expected. The last time that they reported earnings, right, which was back in March, they came out with. I'm pretty sure that they beat earnings the quarter before, but they had mentioned more negative things on the call, right? Bottlenecks and things like that. And after a while, if people are kind of not really expecting too much and a company has blowout earnings, that's the reaction that you get. Same thing with another company. This wasn't expected for the day, I don't think. Virgin Galactic. Now, this is a little bit different because this is a high short interest name, but up 38%. So the more, in my opinion, the more things happen that are unexpected, where the street is not expecting them, the bigger the move that you could get sometimes. All right, when things are known, when everybody knows, that for, again, with the banks and the stress tests, sometimes the move is muted, and sometimes even it ends up being a sell the news type event. All right, so again, just a couple thoughts about that. Just wanted to discuss this Russell rebalance. Some big moves at the end of the day, right? Again, this is just typical, right? That you see. I mean, look at this MasterCard move. So MasterCard, I was talking about the Russell rebalance god. Apparently, this one was liked. Visa, not so much, but not so much of a down move. Look at the move in UNH. UNH went all the way up to 409, then to 397, settled back in there at 404. But whippy stuff. Snowflake, we'll see if this one comes back, but this one got hit a bit. Palantir was a Russell 3000 ad, but you could see it gave back its gains too. From 26.95. It's not that big of a move in terms of pennies, but Palantir doesn't move that much usually. So a lot of that stuff going on. BABA was another one. Right? Look at the volume at the end of the day in BABA. So BABA must have been added to some things. And again with the Russell, as I went over this a couple times this week, but you could see, for example, it's not just the IWM. Take, for example, you could see, this was the fund flow data that I send out every day, but you probably aren't familiar with this ETF. VONG had $846 million of inflows. Basically, dealers collapse their positions ahead of the rebalance so that they don't actually have to do the rebalance. Remember, a lot of dealers are for funding reasons are sitting like short the ETF. Or either long the ETF and short the underlying basket, right? And there's a funding rate that they can arb by what the bank lends them to do such a transaction versus what's on the street. So a lot of times that's a big funding trade that happens on Delta One desks. Long the underlying basket, or long the ETF and short the underlying basket, or vice versa, depending on what the interest rate that's favorable for that. So when they have that big type of position, they don't want to manage, being that that basket changes components on the close, that happened today. What they do is they collapse that funding trade ahead of the rebalance. So you can see this Russell 1 growth, $846 million of inflows. Basically all I'm showing you here is that there's a lot of money that is tracking these Russell indices, not just the IWM, right? Which everyone hears, Russell 2000, IWM, but it's a lot of this stuff. Large cap value, large cap growth, small cap value, small cap growth, that type of stuff. All right. And there's big money tracking the Russell indices. All right. So that's a couple things there. What else? I started to go over this week's performance. Oil and gas, believe it or not, was the biggest performer. That actually surprised me a little bit. Almost up 10% this week. Retail did not surprise me. Retail was strong. A lot of names were strong in the equally weighted ETF, even though it kind of sold off at the end of the day. You could see the performance out to almost to new highs. Remember, this was back in January when you had the first round of the short squeezes where everybody was covering stuff, and GameStop back then was by far the number one weight in XRT. So this kind of distorted things a little bit, in terms of having a equally weighted sector ETF. Banks also had a strong week this week. They were up 6%. They came back nicely from getting beaten up last week. Remember last week, right? The performance value names got shelled last week, down 4%. They came back. Like I said, one of the things to watch would be what value areas would bounce. Banks were one of those groups. Steel names were one of those groups. They were up 5.9% this week. So again, if you look at some of the best performing groups, there is a lot of value in there. Some growth in there too. You could see growth had a fine week too, up 2.5%. But when you're looking at sectors, really some of them that excelled were the value ones to come back. The blockchain stuff actually did not have a horrible week, considering the volatility in Bitcoin. They were down. That was your worst performer, down 1.1% for the week. International performance you could see right in here. So I'll give you my trades as always. But JD was a nice trade from yesterday. Again, I've talked a few times. I'm not going to talk again about the Chinese internet strength, but we kind of caught that pretty nicely. Just thought that there was a positive divergence that we saw in the Chinese internet ETF. That I discussed it a couple times in these end of day videos. But JD had a nice day. Look at Baidu. I've been watching this Baidu for a couple days, but it is now above value, and possibly 217 in the cards. So that's a nice looking chart, I think, for Baidu. And again, you know where this isn't going to work if this thing gets back below the 200-day moving average. Right. So for now, I think I put on a small play at the end of the day in that one. Some of the solar stocks, I put on this SEDG yesterday. I was a little bit too greedy trying to get a second target at like 283. I ended up taking the trade off. It's fine. Again, just wanted to kind of clear out of some trades before the weekend. I tried run a couple times, that didn't work. So again, a little frustrating trades this morning for me, but that's okay. Not every week is going to be perfect, or excuse me, not every day, not every week is going to be perfect. A couple of new trades I put on. I've had this JCI position on for a while. I added to it this week. I don't think it closed perfectly here, but I mentioned that this thing held up pretty well last week. So I'm looking for this thing to kind of continue to grind higher. NRG is a name that we saw option activity a few times over the last few weeks. If you look at the nat gas ETF, nat gas futures, they are moving higher pretty nicely. They're actually out highs for the year, believe it or not, nat gas futures. So made a real nice move at the end of the week. So I got long a nat gas name, NRG, and a name that we've seen positioning in. All right, so that's one. As I said, I tried this run stock. This was a nice winner for me, by the way, earlier in the week. Perhaps I just pressed a little bit with it. MA, I did put on a call spread. This is a chart that I mentioned earlier on Twitter, right? How this thing got above value. Spent a little bit of time digesting, and I like this space. Certainly PayPal, Square have been leaders in here, but I also like Visa and MasterCard. Right, so I did structure a call spread on MasterCard and took some targets and a couple other things. I also like this crowd, the performance the last couple days, like 3 inside days. Right, I know this candle, the wick of this candle went outside. I like to refer to the inside days when the body of the candle is inside the previous candle. So you could see, big volume on the green days, small volume on the red days. I like that. So I actually put on a little bit of a position. I know it's elevated and it's up there in CrowdStrike. That's why it's just a starter, and that's kind of how I ended the week. So that's it, guys. Have a great weekend, everybody, and I think continue with the the date again. We're getting close. We only have 3 more days of June. Today's June 25th. And, this was a really nice move. And, I always come back to with this market. I talked about in the beginning of this video about, being careful about not making predictions and so forth, and not getting anchored to predictions. But, could you have been able to kind of predict that we were going to have, a June that's, doing what it is at this point, out to new highs? I know I wouldn't have said that. I thought back here that we would continue to kind of grind higher. I thought that we would get some volatility last week with FOMC and quadruple witching, but I wasn't expecting a big red candle like that. Nor was I expecting a big green candle like this on Monday. So, again, being comfortable with not having to go out on a limb and make a ton of predictions and being able to react to what the market is giving you, you're going to do just fine, right? And, I try to mention that a lot in these videos so that newer traders, you don't have to think that you need to make a whole bunch of predictions. It's really about just following a process, following a trading plan, being disciplined, planning out your trades before you get into the trade, and realizing that you're going to be wrong a lot of the times, and you just knowing how to react when you are wrong. All right, guys, have a great weekend, everybody. Thanks for watching, and I'll see you on Monday. Also, last final note, sorry, I always forget to mention this, but if you are interested, Right? And being a member of the Tribeca Trade Group. We have a fabulous community of traders, everybody helping one another out this week. It's really a team, right? It is a team play that we've got going on. The fact that we're all trying to help one another and maximize our weeks, maximize profit, minimize losses. Here's what you get. Just click on my link, and if you haven't tried it out before, give it a try. And I think that you'll really like the teamwork and what we've got going on in here, on a daily basis and week to week basis in terms of accomplishing our goals. All right, guys, have a great weekend.